Hi, this is the weekly recap, and we start as usual with the market outlook on SPX. The SPX has been fairly bullish recently. I mean, the last week, although this is not quite visible because these are Aiki bars, but the range was actually tighter than that. Still some bullish pressure. The indicator here is still pretty strong, although it's now in oversold territory. So we may have now on the 2600 may see sellers try keeping a barrage and containing bullish pressure until this indicator starts peaking and flattening. In terms of levels, we have a resistance level more or less on 2630 using a small amplitude pattern here. It looks like we could go higher to maybe this area, 2660 area. We have to wait for momentum to fade out, so it's likely that it's going to try and push higher. That said, this is a strong resistance level. It has been tested 3 times last week, and anything can happen. The market is still not behaving normally. The express volatility is still too high, and also the trading volumes are a little bit erratic. It's gone better later in the week, going back to the normal. So I would say that this period over the festive season was very dry, but that's almost normal. Now we see trading action that is coming back to normal, but still on the lighter side. It is quite possible that also the trading environment is changing with more and more algo trading now affecting the dynamics of the market. So what I'm saying is that this change in the environment with express volatility being higher than implied volatility may last for a while or may be actually the new norm, which will make market neutral net sellers of Vega having to put on more effort to make the strategies more successful. It is likely that the difficult environment will last for a while. Okay, there's not much to add to this. So yes, maybe in terms of possible retracement, I think the bullish pressure being strong, retracement would be limited to maybe at best 2550. I don't see the 2500 being tested this week, although of course the market is always full of surprises. So the range will be probably 2500 to 2630, and hopefully the market will stabilize around here and not go for very large moves over the next week. In terms of volatility, term structure, we are slowly going back into some form of contango. Still overall very flat. I mean, this scale is actually exacerbating the return to contango. It's actually not that great. But yes, it was very flat for most of the week, and it looks like that on the January expiration next week, premium is being released and volatility is being rolled over to February and March. There's still a lot of uncertainty. We can't really contango-ish structure is still quite fickle. It could actually flatten and go back into backwardation. So we're not out of the woods. It's just a difficult environment, but mostly because IV has deflated a lot. Express volatility also, but we still have an environment that is not actually very favorable to our type of strategy. Okay, next videos will be on the Rhino.